Hello to all friends involved in crypto trading and long-term Bitcoin allocation. This is a high-level, practical, deep analysis video on Bitcoin. To clarify, this video is not a basic introduction to Bitcoin or blockchain. For entry-level content, you can use various AI tools for self-study. This video focuses on professional valuation systems and macro trading logic. This content is suitable for investors with over a year of Bitcoin trading experience, those who need a complete valuation framework, or those who want to understand how macro liquidity drives market movements. Next, we will break down mature market theories into 3 parts, covering 3 valuation models and 5 main macro factors, and finally introduce a comprehensive prediction model that integrates all dimensions. Part 1. 3 mainstream Bitcoin valuation models. Currently, the industry generally recognizes the S2F model, Metcalfe's Law network value model, and the macro liquidity cycle framework. First, let's look at the S2F scarcity model proposed by analyst Plan B. The core logic is that Bitcoin's price is determined by digital scarcity, similar to gold. The first logic point is the S2F ratio. Stock is the total existing supply, and flow is the new annual production. The higher the ratio, the stronger the scarcity. The second point is the 4-year halving supply shock. With each block halving, new output is halved, doubling the S2F ratio and driving long-term structural price increases. History proves that the S2F curve aligns closely with price trends. The model estimates the average price anchor for the 2024 to 2028 period to be around $500,000. Next is Metcalfe's Law. Unlike S2F, this model doesn't look at supply. It views Bitcoin as a value transmission network where users determine value. The core logic: network value is proportional to the square of active users. If users double, the theoretical market value grows 4-fold. In summary, Metcalfe's Law suggests that user growth is the most fundamental driver of Bitcoin's long-term value. The third model is the macro liquidity model. This framework breaks away from simple halving cycles and is currently the most valued by institutional investors. The macro liquidity model is the one I identify with most. The core view is that Bitcoin has evolved into a standardized macro asset tied to global liquidity, rather than just a retail speculative play. To analyze Bitcoin now, we must track the global macro environment. Let's examine the 5 core macro factors. First, global M2 money supply. It is Bitcoin's strongest leading indicator, with a correlation once exceeding 90%. M2 expansion usually signals a long-term bull market. Second, international gold prices. Gold typically starts rising 3 to 6 months before Bitcoin, serving as an important buy signal reference. Third, the US dollar index, DXY. There's a clear negative correlation. A weak dollar cycle is the best window for long positions. When DXY drops sharply, Bitcoin highly likely surges 3 months later. Fourth, the PBOC balance sheet. Expansion by the Chinese central bank often precedes Bitcoin rises, representing an indispensable Asian liquidity driver. Fifth, the US ISM PMI. When PMI rebounds from the bottom of the contraction zone, it's a key reference signal for mid-term Bitcoin positioning. Finally, I'll introduce my comprehensive prediction model, which integrates all these macro factors through an algorithm to provide multi-dimensional pricing forecasts. The white line in the middle can predict Bitcoin's rate of change, or ROC, 3 months in advance. You can see the green ROC follows the white line very closely. The days shown in these boxes are automatically calculated based on the highest and lowest points. So far, there's no reason to doubt the 1000 plus 400 cycle rule. For this bear market to reach 400 days, we'd look at the end of the year. The bottom should be around New Year's Day 2027. Experience tells us that in a bull market, focus on the upside and avoid shorting. In a bear market, focus on the downside and avoid longing. Currently, we are on day 278 of this bear market. Staying patient and following the macro logic is key to navigating these cycles. As you can see, I haven't talked about on-chain data or other fancy metrics. My framework's data sources are all old-school data. This includes DXY, M2, gold, PBOC balance sheets, and ISM PMI. These existed long before Bitcoin was born. It's proven that old-school data drives the movements of new-school assets, especially since Bitcoin ETFs were approved in 2024. That's all for today. See you next time.